Aloha, everyone. It was basically a pretty much do nothing day overall for the market, which is kind of something that we needed. However, once again, we have a lot of cross current signals. Today, the NASDAQ dropped 0.23%, and what's pretty crazy is that before, like near the end of the day, we looked like that we were going to go out and close above yesterday's highs. But unfortunately, Mario Draghi came out and Europe said that they are not going to work with Greece, and that sent stocks sliding. And with the sell off being not quite 0.25% but greater than 0.20%, I guess we'd have to technically make this a distribution day with the reversal. But the bottom line is we remain under a neutral signal on this index. And as you can see, while our MACD is trending higher now, we have a set of higher highs and higher lows, our TSV has come back down to the moving average line. So we don't really have any confirmation of strength with today's pullback. Now, if these oscillators continue to both rally while we pull back, I'd say that's a great sign. But as it is, we continue to see heavier volume on the down days than we do on the up days. And in this consolidation pattern currently that we're in, we need to be careful. Then looking over at the S&P 500, you can see the same similar situation. Let me get rid of all those lines. Closed down 0.42%. Volume was actually lower than the session before. Once again, TSV has come back down while MACD is moving up. So once again, we have mixed oscillators with a market that's range bound in between the recent highs and lows. It's a do nothing kind of market. It's kind of a protect your capital. NYSE, similar situation. It's back below both its 50 and 200-day moving averages. The good news is volume was lower. Once again, though, MACD and TSV tell two different tales. The strongest performing index overall, though, still on a daily, weekly basis is the Russell 2000. It continues to trend above the 50-day moving average, but it too has TSV kind of not really agreeing with the price action while MACD does. Looking over at stochastics on these indexes, they're very strong, yet the market isn't exploding higher. So if we don't get moving higher here pretty soon on these indexes, this oscillator is going to be in overbought territory. And obviously, whenever this index hits overbought territory, it doesn't like to stay there very long before reversing lower with prices. So right now, it's kind of a do-nothing market. That being said, we have no new long positions either today. A few stocks that I flagged, high-quality CAN-SLIM stocks, SWIR. Not enough of a volume surge on today's pocket pivot point signal with a long enough current consolidation pattern. It's kind of right off its lows, and in 3 days, it's up 9%. That's just too risky in a tape like that. Also, Terena International Incorporated, nice pocket pivot point signal off the 50-200-day moving average. Look at all the poor closes, though, that it's had in January and February this year. Stock cannot close near its day's highs. It came closer today, but still off the 1250 highs. So it's just something to watch right now. Really, if you're thinking about going long this stock, what you want to do is wait for a close above these levels right here before you get long. So right now it's just one that's flagged, and then another one that's flagged is one that I profiled recently on StockTwits, SIMO. Technically, it's breaking out of a handle pattern here, a cup with handle pattern. I don't know. Hold on, I'm going to check to see earnings. It's one thing I didn't look at for this one. See it come up, SIMO. Oh yeah, so earnings already out and out of the way. My biggest problem is whenever you look at the daily, it's just a wide and sloppy chart. But technically, it is a cup with high handle breakout. To me, it's good. You can take it. You don't risk much if you're wrong, 4 or 5%. But I don't know. I just don't love this breakout. I think I would rather see this thing break out, work without me, and let the market confirm that it wants to rally first before we start looking at an entry into this one. And then there were only two other stocks outside of the CAN-SLIM stocks. AMPH is an IPO, and that's breaking out to new highs. I like the way it looks and everything, but I don't know. Drug stocks and biotech stocks have been a mixed bag lately. I think it's kind of dangerous. I didn't check AMPH's earnings either, and their earnings are out of the way too. So once the biggest thing is if AMPH was showing huge earnings and sales growth, had some amazing estimates, I think it would be different. Of course, it's going to take forever for the weekly to pop up, but as you can see here, there's no real sales growth over the past 8 quarters, and it's going to lose as much money as the year before. The only thing that's kind of interesting is mutual fund ownership's gone from 21 to 99 funds, and there have been insider purchases since the IPO. But with the market in the current situation, go ahead AMPH. The only way that I would have bought this one is if it would have done this pocket pivot point signal on strong volume and not have broken out to new highs. If it would have been bouncing off this 50-day moving average support level, maybe up only 2% today, that'd be the case. Or maybe if green bop, if this thing would have exploded and given me very strong green bop or max green bop like it had it here in late December, early January, yeah, maybe. But as of now, remember, I want my stocks to look perfect. The best setup that I was thinking about going long tonight is QTNT. It's already got max green bop. The bop's already increased the past 4 sessions from the yellow area. Stock retook its 50-day moving average after the 30th with a gap up, held that intraday support lows around 1441 by closing only at 1443 the next day. Now it's starting to turn higher again with it already having max green bop and clear accumulation. My problem is with the arithmetic chart, there's still plenty of overhead resistance in a choppy market environment, so it makes it risky. And today's move is, to even know that we're wrong on this move, we've got a risk right around 6%, at least 7, 8, possibly 10%, just to get down to the lows. Like to have it re-enter this base. Let's see right here how much this is. Yeah, we're risking at least 10%. So in this market environment, it's not something I want to do. But this is probably my best looking signal tonight, and it's not even that great. If the base was a lot longer, and then this move was happening, maybe we would go long. Some sells. ABAX is a 50% sell signal. I'm already out of all of it. Full sell signal's already been triggered by me. CHRW was listed as a new long last night, obviously with it capping down below where it closed in the morning of 73.25 because of earnings. I thought earnings were already out. I guess they were. Something else happened. I got to look into the story. All I know is that it gapped down below where it opened, negating the long signal. So CHRW, if you did happen to get long, you're long at 72 and it's at 750. So I think you're only down 1.5 to 2%. You got to cut your losses fully and move on. Also, INCY is a full failure, and AGTC is a full failure, and PLNR is a full failure. I basically had nothing but my intraday stops triggered on PLNR. And the day-wise, I'm not going to have any sells, as all of these that I just showed you have already triggered their full sell stops for me personally. But INCY, PLNR, AGTC, CHRW, if you did get long CHRW, are the only full sells tonight.